Well, hello, and welcome back to my channel. This is a weekly wrap-up for a whole month of August, the week as well as the month. So we're going to touch base on both of those impacts that we experienced this week. Let me tell you, this month has been pretty crazy, and I'm kind of glad that things are maybe settling down going into the fall. As I had mentioned last time we spoke, was that on our weekly wrap-up anyway, is that September is typically a poor month for the equity, poor performing month for the equities. Kind of things are settling down. Mutual funds and such are realigning their portfolio. So we'll see. But like I said, kind of getting this last month behind us was a great learning opportunity, I think, for all traders, how to watch the market a little bit more clear, gave us some clarity as to what impacts the market, as many things did over this last month. So let's talk about what did happen this last month. The S&P for the month was up, 2.3%. The Dow was up 1.8%. Now the Nasdaq was the poorer performing of the three. It was not even up 1%, and this is for the month of August. As you recall, we had quite a sell-off at the beginning of August. But we have since certainly recovered from that. Now the VIX stabilized as well. It came down quite a bit. The VIX is kind of the fear gauge. It's like, oh, what's going to happen next? So that came down, back down to about 15, whereas earlier in the month it was up to like 65. So a lot of the fear on the street in the market environment. So that's kind of settled out as well. So to me, that's a good thing. So the consumer confidence came out this past week. The core PCE came out. That was steady. Consumer confidence rose, which was good. And the initial first-time jobless claims, those went down. So that was all really good news for the economy. It was also good news for the dollar. The poor dollar, it had like the worst month in a year. But the last 3 days of this month, it did recover as well. So, but as you know, we're going to have some Fed interest rate discussion towards the third week, I believe it is, in September. We'll talk about that later a bit more in depth. But so, of course, that will impact the dollar and probably devaluate it a bit, depending on how much those interest rates come down. So something to be on the lookout for. So let's take a look at some charts. In front of you here, this is the S&P. This is on the weekly chart on my side over here. And then we have the daily chart. Now, the reason I brought up the weekly chart this week is that I wanted to point out this huge hammer formation right here in the middle of this. And that was after that week of August 5th, that drop down that we saw. But look at that fantastic pattern that we saw here. Now, it hit this low, and look over to the left. As I always say, look to the left, and you'll see certainly some support in that area on the weekly chart. But this is such an incredible formation, followed by that bullish extended range candle. Just really, I enjoy watching that. And we'll look over to this one, and this is on the daily chart. These are the candles that formed that hammer over here on the weekly. So take a look at how those just consolidated for that whole week with good day trading opportunities there for sure. And then it finally broke out of that. But look at that extended range, that bullish candle again on that green one, the last one. This is on that Thursday of that week, and then it broke up and closed above that on that Friday. So then we felt we were kind of over that hump, and I'm back on the move up, as you can see. Now let's take a look at next. Over here I have the Nasdaq and the S&P, and this is on the hourly chart. Now, I always like to look at the higher time frame charts because they, like I said, they give you great indication. Not everybody's a day trader out there. You have to keep that in mind. There's a lot of big players that are looking certainly at the longer time frame than what you and I probably are. But I always like to be aware of what's happening on the weekly chart, what's happening on the daily chart. What kind of formations am I looking at? So anyway, I get excited about that. But let's take a look at the Nasdaq and the S&P again. Like I said, this is on the hourly chart, so I certainly do break my days down into a shorter time frame, the hourly, and then I'll don't go down to the 15-minute, even the 5 when I'm looking for a confirmation on a momentum change. And we'll get into a different strategy on that later. But that being said, let's look at the NASDAQ and the S&P. Like I said, on the hourly, look how similar they are. They were just really, really traded in tandem throughout these last few days. So it was just very interesting to me. But what I wanted to point out, these are a couple levels here that I have. You can see that it is consolidated through those areas on both of these charts. We have a price line at the support and also at the resistance. And again, on the S&P, we got some resistance here and some support. Now, if you go over, we can see where that kind of bottom up, but, you know, just really within that range, going back quite a few hours or quite a few days. So we'll see if it can break out of that. But what I found interesting as well is when on the NASDAQ, I drew a Fibonacci retracement, which I often do with the swing low to the swing high here. And I was waiting to see, I always have that on there, kind of seeing what does play out on a Fibonacci if I have such dramatic price movements and, like I said, swing lows to swing highs. And sure enough, it came down to that 0.618 level. You see, it did it twice, it tested it. And sure enough, it broke above. I'm not saying it just ran up, but it certainly indicated to me that there were some buyers that were waiting in there as well. So it tried to test it a third time, and it couldn't even bring it down to that level. So it's just an interesting, again, like I said, you can put it down to your 15-minute chart, then look for those opportunities. Watch your indicators. What are they telling you? You're going to have some indicators that you're going to start really, really depending on, and some, even if some are lagging indicators, and we know most of them usually are, even by the RSI that I watch always and have it always on my chart, it's still a lagging indicator, but it will still indicate it to me, is it more overbought or oversold? So you'll start to really appreciate and learn how to read those as we take this journey together. So I wanted to mention this week, like I said, September is kind of a week. We're going into the after a holiday. Today actually is the holiday. There was some trading overnight until like noon today, but not much volume. Certainly nothing that will indicate that that's what's going to happen in the week to come. Overnight, it was certainly our market was closed here, so I kind of stay away from that because, like I said, the volume is lower, and it doesn't really give me a lot of indication as to what the street's going to be doing this coming week. So we do have some earnings come out. Well, NVIDIA came out last week. It didn't quite meet the expectations that they were hoping for. Yeah. That one's really fun. It's kind of fun to watch, and it certainly is indicative of what's going on the other parts of the market. Just so volatile. This next coming week we have, I think it's Broadcom, Hewlett Packard, Dollar Tree. Those earnings are coming out. So, but nothing really on the economic front. Not this week anyway. So. Trade with traction, not distraction. Please comment. I truly would appreciate that. I'd love to have your feedback. Subscribe and like. Take good care. Thank you.